Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with a quick market update for today, 31st of August, last day of the month of August. Thursday, we have still tomorrow as last day of the week for trading, new month, but long weekend ahead. Monday is Labor Day, so take that into account for tomorrow, Friday, because yesterday and today the price action has been really lackluster, really choppy, and not the best to trade. So take that into account. Let's start with the economic data for today, because today we got two big pieces of data. First one, the PCE in terms of general PCE price index year over year. Well, we were at 3%, so we are moving higher, meeting expectations, but not as good as one would say because it's still going higher. In terms of month over month, we are flat. We were watching in the previous one 0.2 and as expected. That's for the PCE. And the other piece of data really interesting is the personal income. This means obviously income, so more money to spend in terms of income and also for spending. So we have two sets of data. For the income, we got a little bit of decrease from the 0.3 on the income, but for the spending, one should think that we need less spending to beat the prices down. But let me tell you, month over month, the spending is going higher. So higher PCE price index and higher spending, same as expected, and a little bit lower on the income means not as bullish as one would say. I think markets are disappointed today because that with the fact that initial jobless claims came lower than before and continued jobless claims came a little bit higher, so mixed sentiment, but one would like to see lower PCE, lower spending, and higher jobless claims. So with this picture in mind, we have to really pay attention also to the charts, and that's what we are going to see to do right now. In terms of fundamentals, we are a little bit lacklusting. We were waiting for more. Markets expected more. And remember, this is the daily chart. We have this descending trend line directly onto huge level of resistance on the NQ, and right now we are putting a doji. Don't forget about this double bottom higher low on the daily that we moved higher. So we are now converging on a really huge resistance level. That's why yesterday I was saying that all the price action was showing that, look at yesterday's price action, look at these sellers were there waiting for this candle, for this candle, for this candle. So what happened today? In pre-market activity, we were waiting for that. We looked below, we established the pre-market lows, and we then move higher into the open. The PCE price index news and the consumer spending were a little bit of worrisome because basically we were trending lower into the open, but look at this huge push high, huge push into pre-market level. This pre-market level, we were chopping around trying to establish support. We did it right now quite good, but then we tried to move higher on, I think, on a relatively quite a bit of strength. But let me tell you, 15,600 was the nail on the coffin, at least for now. Why? Because we are seeing a lot of descending resistance and descending price since we reached this level. We have been watching the pre-market as the main area of support for today. We've been bouncing over and over and over and over, and I was watching this descending resistance into this breakout. We got it, but look at this huge resistance. So that means that sellers are still active. So where we are right now in terms of sentiment, I think we are chopping around same as yesterday. We are not able to push higher on the daily resistance, descending trend line, and pivot. And after this huge rejection, I think the most logical way to think is just to do this kind of rejection and continue lower. Establishing previous support is now resistance. So that's for the Nasdaq. And I think it's quite disappointing. Starting with the fundamentals, disappointment, and with the price action, second day of choppiness, also disappointing. So what else we can look for? Are we correlating with the dollar, with strength in dollar? The answer to that is yes. We have been putting a nice bullish candle, 0.52% on the day after the move down. So we are establishing this zone as support, and the logical way is a retest of this zone of 104. That's for the dollar. The good thing is that yields are going lower, as you can see, are pulling back from highs. The 2-year yield is pulling back from 5.1%, and the 10-year is also breaking down 4.1%. So yields moving lower means that the market thinks that Jerome Powell is not going to continue raising rates. Treasuries are actually continuing higher after. Look at this beautiful chart because it makes out of sense. Yields were topping down in 2000, at the end of in October of 2022, and we now retested this area. And since then, now that we are approaching the terminal rate, treasuries are really pushing higher. I'm watching personally this level to really buy treasuries because I think a move like this might be really possible to break the 100 level. And I think treasuries are going to be quite attractive because the risk reward ratio, now that we're approaching terminal rates, it are really there. Yields are pushing lower basically quite heavily, and treasuries are going to be higher, at least for now. So with that in mind, also gold is feeling pressure. It's bouncing, but a red day. Copper, it's also in the middle of the range, in the middle of nowhere. Silver, after the gap up of the change of control, is just putting a topping tail and a red day. Banks are in the red, as you can see. The only one pushing really is UBS after earnings, 4.69 blowing out earnings. So UBS is the only one pushing, but financials are in the red, energy is in the red, utilities, staple, healthcare, and the Nasdaq is it's basically showing that again. It's showing that it doesn't want to go up and it doesn't want to sell off. It's just chopping around in a huge daily resistance level that for now it's not able to break. Both sides, big players are playing their cards. So bulls and bears are fighting here. That's why we are getting these 2 choppy days. And tomorrow would be really quite interesting to see what we get, because tomorrow we are waiting for non-farm payrolls and unemployment rate. For non-farm payrolls, we are expecting, the previous one is 187, and we are expecting a decrease. That would be good for the market, less wage pressure, and unemployment rate, at least the consensus and the expectation is to remain at that level. Unemployment rate going higher, it's also quite a little bit bullish for inflation, because that would mean that employment strength is going lower, and Fed wants that. Fed wants a little bit of 3.8, even 4% unemployment rate to really see inflation going down. And what else? Average hourly earnings year over year. This is quite important. We are consensus is flat and earnings month over month to continue lower. That would mean that people have less our earnings, the earnings are less on their jobs, so they have less money to spend. That's for the expectations for tomorrow. So we are going back to the charts to really see how the Nasdaq is developing. Well, as you can see, we are just in the middle of nowhere. After this huge push down, be really careful taking longs. We had our opportunities and we failed big time. So that's worth taking into account. So be really careful for the rest of the day because traps are everywhere. Price action is not the best the last 2 days. And I think patience is going to be key for your survivability. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos every single day like this one for market forecast, market updates, market recaps, weekend recaps, everything you need to really understand all these markets and their fundamentals to really provide you with an edge for approaching the markets if you like to trade, invest, or take further positions. So thank you for your time. Remember that discipline and risk management are key for your success. Those are critical for your career. So stay safe, everyone, and see you tomorrow, Friday.